right. Good morning, everybody. Thanks for joining. I know this is not the best time. Good morning, Steve. I know it's not the best time for people. Monday morning, people. It's a holiday for some. But what I wanted to do is I've been wanting to try to go live Sunday nights, but I don't think I'm going to be able to go every Sunday night. It just depends on a few things. I'm going to aim for once a month Sunday night, and then we'll have a market open session as soon as I can. During the week, I think it's going to be easier for me to organize that, maintain that. But good morning. Wanted to take a look at a few things. I have a Glassnode thread here that I retweeted that I wanted to go over some data here and look at just the broad markets, look at where we're at, and look at this little bit of bounce we've had off the bottom here and see what kind of actionable signals we can get. As a lot of you know, I've not been actively trading much crypto lately because it's just been in a downtrend. There hasn't been a whole lot to do, but we are starting to see lots of signs of a potential bottom being put in. So what we want to do now is start to really look around the markets and see where the opportunities exist. So I want to start honing in on that today. Let's start with just looking at the broad markets real fast. Let me go back to my markets list here. We're going to take a look starting with the DXY. So the DXY broke this prior swing high we had here back in 2017. And we've broken up to the upside of that. And that area of support that we put in, obviously we had a false breakout and a retest of a lower level. And you see it came back in here to about 101 area. But we kind of formed this uptrend ascending channel. And when it bounced back up off of that, that was our signal that's probably looking to break through. Now, as with most things, once it breaks through significant resistance, which this would have been right around 103.8, it's going to take some time to consolidate probably on top of that resistance and then resume up potentially. Sorry. So that's what I'm watching right now. This is what I think is going on with the DXY. Obviously, largely will depend on what the Fed decides to do. Long term here, next month, we'll see what the CPI print is. A low CPI print as far as the inflation percentage would probably give us a little bit of a sell-off in DXY, an expectation of a lighter hike by the Fed. But obviously, if we continue to see high inflation numbers, then the Fed's going to continue to ratchet up. So we'll just see. But this might be a little bit of forward signal as to what the Fed might do if the market gets wind of what's going to happen. But so the market started to rally ahead of last meeting on that CPI print. So we'll keep an eye on what the DXY does. But it looks to me like it's consolidating above. Not the end of the world for Bitcoin. It's the trajectory of the dollar that really the relationship between Bitcoin and the dollar is more, is the dollar gaining strength? If the dollar is gaining strength, then risk on assets are typically declining, right? If the dollar is losing strength, then risk on assets are typically appreciating. So as long as the dollar consolidates for a period of time, risk on assets can put in a little bit of a floor finally. So we'll see how aggressive this move is. The S&P 500, so this was the range I was looking at originally. We got a little bit below it. And so in my head, I keep wondering if we don't maybe make a final low wick right around this prior swing high. Something similar to what we were looking at on Bitcoin in its prior bull market swing high. But this 2020 swing high seems like a pretty good place because while the Fed is ratcheting up and really starting quantitative tightening and interest rate increases, the increase in money supply still exists largely. So the fact that we might make it all the way back down to the swing high would be a pretty decent low point for at least an initial bounce, just like the good old days. Let's go to the M2SL. I don't have it on this. There we go. All right, and I was highlighting here, we've had a dip in the M2SL, but you can see that the expansion in the money supply from, the pandemic on is still extreme, and it's only been a small decrease in M2 money stock, which obviously is more than just the Federal Reserve's balance sheet. That has to do with all lending, all available money supply. So keep an eye on what happens as things continue to tighten, just like the good old days. Remember, USD is the other half of the BTC USD trade. If you're familiar with FX, yes, exactly. So the DXY and the strength of the dollar is important in engaging where risk on assets, Bitcoin being one of them. And you look at the pairing, obviously we're looking at the value of Bitcoin versus the US dollar. So as the US dollar gains strength, most assets that are denominated in the US dollar are losing strength, generally speaking. Let's look at the NASDAQ. The NASDAQ's a little bit simpler of a chart to me. Now I've got S&P as a very similar chart, but the NASDAQ's a little bit more clean on this particular structure that I'm seeing. So this is the first support area I was looking for a bounce in NASDAQ. I actually had it originally a little bit higher, but really just reconsidering things. If we look at this general area that it came into support at, that is right around 11K. Yeah, 11K to 11.3-ish. So we're at 11.4 now. So we did have this obviously ascending structure. And when we lost those moving averages as we fell out of this ascending structure, it was pretty obvious that it was going to come down for a while. Our dead cat bounce was early and faster than I would have anticipated. I would anticipate this to be a stronger dead cat bounce to have happened more over here where we're at now. We'll see if that happens. If we break this wedge that we're putting into the downside, we'll look at some fib level retraces when that breaks out. I don't know that we'll get a complete retrace to the top and back out, making new all-time highs right away. My expectation at this point would be that when we break this wedge structure, that we get about a 0.5 to 618 bounce, and then maybe back down again. That's my guess, but we'll see what happens with this structure as it unfolds. Bitcoin, obviously, the news of the week is we came over the weekend and broke down the prior all-time highs. So we have another divergence in this cycle from what usually happens in Bitcoin cycles. Let's go look at that on the BLX chart here. So I had a measured low of the prior all-time high in this box here. We've come faster and further down than that box would indicate. Now, in cycles prior, we had 80% drawdowns, right? So we were hypothesizing last time that we might not get quite an 80% drawdown. It might be in the 70s. So we're now at 75% drawdown. Is that real? So the weekly gap looks gnarly on this particular chart. It's not really a gap of any futures, I don't think. Let's go look at the futures chart after this, but I'm pretty sure that's not a realistic gap. But we did come back down to weekly support levels, and we've held weekly support on a weekly closing basis at around $19,000 so far. We'll take a closer look at that. But let's just continue to redraw this. Now, the other thing about this is the time that we have from the top to the bottoms. In theory, if November was a true top, we have a ways to go until we finally get to the very bottom. But we should be getting really close to a bottom, as indicated by a bunch of metrics we're going to look at. The 200-week moving average obviously is one of the main ones that I use, just because I use the moving averages a lot in my trading. Anytime you're below that 200-week moving average, it's prime accumulation. So for me, obviously, I don't have any trades open, but I've been buying. So my last order that got filled was at 18,000. My next two orders are all the way down at 14,000 and 10,000, and I'll show you why I have those orders in. I was really put those orders in looking for a continued liquidation cascade and see if the price would just very temporarily push down to those levels. But those orders are in at 14 and 10,000. I'll show you what supports I'm looking at and why I'm kind of going ahead and buying on any sort of liquidation cascade down to those levels. But let's redraw this. The bottom might actually be in. The best case scenario at this point, in my opinion, is that we just simply hover right around or right under this 200-week moving average as we come into what would have been the bottom of the timing of the cycle, and then we go ahead and maybe we double bottom, perhaps. That would not be too terribly bad. 18,000 hit again, and then we rise into the next halving. The big question is the spot ETF. I still see people out there saying that they think the spot ETF is going to be approved next month. If that were to be the case, that's going to make this a V-shaped recovery most likely, because that's just too much buying demand. But I don't know. When I say V-shaped recovery, I don't know. Given the bearish sentiment in the market, I wouldn't be surprised if we didn't just simply hit resistance if that news event took us to resistance in that $30,000 range, 33,000, back up to this resistance levels through here, and then it consolidated there, pushed back down, and then resumed up out of there into the next halving. But at this point, I'm mentally planning for the spot ETF to be approved next year ahead of the other halving, which is going to create kind of a double event potentially. So back to my point is that, no matter what happens, this is prime area to ramp up dollar cost averaging. Not financial advice. That's my opinion. Actually, I didn't do this last time. Let's do our Van by the River spiel, but I'm not a licensed financial advisor. And as evidenced by everything that's happened this year, if you end up listening to me, you're going to end up losing all of your money and living in a van down by the river. There you go. All right. Now, looking at this glass node, let's look at this glass node thread here real fast. Wanted to pull this up. And then we're going to look at some other projects, bear market projects. That's the next thing we're going to do here in a minute, is look at some bear market projects. But I want to really hone in on, let's try to identify if we're getting close to a bottom. And you can see here, Glassnode, I retweeted this, over $7.3 billion in losses have been locked in. I'll take a sip of my coffee, 1 second. Nice cold brew. Locked in by investors spending coins that were accumulated at high prices. Try to explain some more detail. So obviously we see here very high losses denominated in US dollars on these massive liquidation events. Okay, entity adjusted unspent realized price distribution. And so we're seeing here some older coins that are starting to be sold, right? So this is the one of the main themes that I'm seeing is long-term holders are capitulating here. What I didn't really think was that I was thinking we were at an all-time high in long-term holder capitulation. But as we go through here, we'll see that it might not be too unprecedented what's actually happening now. But you can see here, this is revived supply last active 1 year ago. So this is people moving coins onto exchange and selling that have been holding for more than a year. And you saw back in August of 2021 and through December, there were several people that were getting out of coins that they've been holding for longer than a year. And then we had a pretty big spike of capitulation in February, but we've had another pretty decent spike now. But you can see it's more the overall volume of these coins is starting to increase. So when we look at this chart, you can see a little bit better. This is, normally you get a supply held by long-term holder decline when price is going up. So in the late 2020, early 2021 run and peak, that's when long-term holders were really selling into price strength. And then long-term holders bought in heavily from that summer low all the way through the November peak. But long-term holders really never took profit, not anywhere near the level they did in 2021 on that late 2021 peak. And so I would say that, my trading profile mirrors this chart a lot, right? I took a lot more profits through this region in spring because it was clear that it should sell off quite a bit with all the derivatives and everything else data before it resumed back up. But I think this very minor peak caught many of us off guard as to how far that my expectation was this was going to be another Wyckoff distribution into an accumulation low around $40-something thousand and then a resumption up, right? That was what I was thinking was going on when this happened. And apparently I wasn't alone in that. Apparently a lot of long-term holders were also not really looking to sell this particular peak, thinking that, yeah, we might have a little bit of a sell-off on this, this breakout, false breakout, and then consolidate and resume back out. But I don't think any of these long-term holders and myself, we all did not think that this was going to be a multi-year peak, right? This was going to be the bull market peak price. It didn't seem, a lot of indicators, fundamental indicators did not seem to indicate that. But over here, we see this from the sell-off starting in late March, early May. Long-term holders have been capitulating into this price weakness. So this is one of the bigger drawdowns in long-term holders that we've seen. It's not completely unprecedented as I was thinking before, but this is significant. So in my opinion, what I see happening here is we have large crypto funds and large projects that are being liquidated. So obviously Celsius is in hot water. I don't think they've been liquidated yet, but they're really struggling right now. And 3AC being liquidated. These what's happening is those larger entities are getting liquidated, as well as retail. Probably still some retail out there that's over leveraged, but I think most of the retail interest really dried up, after November into early this year. So this is mostly large, long-term. So this is forced selling of long-term holders. So there's just a lot of leverage built up in the system. If we let me go look at something here real fast. Let me pull up another chart, a live chart for you. I'm just gonna pull this up on CryptoQuant. What was handy? Sign in over there 1 second and pull up a couple live charts on CryptoQuant here. All right, so look at this is the OI profile. This is my little daily dashboard. Let's just zoom in on the OI profile here. This is open interest, right? So this is all the derivatives that are open against Bitcoin. And you can see, obviously, we had a clear spike in April, which there was just a lot and the funding rate was just astronomically high all through here. So it made sense to take profit through here. The OI rose extremely high, but OI never got nearly as overheated for the same period of time as it did in November. So it did make sense that there was going to be a sell-off. And I think pretty much after this OI wipeout right here in early December, I thought at this point that we were probably closer to a bottom, and obviously I was wrong. This OI increase here there were several of us that took some profit on this massive OI spike. And the same thing here, this massive open interest spike over here at 48,000 is where I took a lot of profit. And then, as if you guys recall, I took some profit at 39,000. Yeah, I was pretty much out of the market by the time we got over here. But you see this large increase in OI again. So the market is just flushing out all this open interest. Let's try to zoom in on this chart just a little bit here, get a better picture of more recent. Now, obviously, open interest really wasn't a thing, so these derivatives weren't available in prior market cycles. This is significantly what's changed about this market cycle. And I think if we really closely study the behavior, the interaction of open interest to price and a lot of these mechanisms that are in place, it's going to give us maybe a little bit more of a heads up in the future. I don't know that we're ever going to see the leverage FOMO. We probably will. I mean, the market's the market, but it'll be a while until we see this crazy leverage FOMO with how many people are getting liquidated now. But nonetheless, these OI levels we're still sitting around 7 billion. And now in the summer, we got it liquidated all the way down to $5.2 billion. And that was at a Bitcoin price of $34,000. So over here at a Bitcoin price of $18,000, we got down to a 6.8. We were higher open interest at a much lower price. So my concern is that we need to flush possibly a little bit more leverage out, but we've done a good job of flushing quite a bit of leverage out. So we'll just see. It's going to take a few months for us to really gauge what open interest is going to do next. But at some point when the price makes a floor, we're going to have a new kind of probably floor in open interest. So what I'm looking at here is what we should have done is taken note of this low in the summer open interest, and we waited for price to come and close that gap to be closer to this level. So these levels clearly were not enough of a flush. So getting back down to $10 billion was still a little bit overheated. So we can see our open interest low again, 5 billion. Coming into the bull market, we had open interest of right around $1 billion. If we go further back out. So in 2019, there was open interest of several hundred million. And then after the COVID capitulation, it got down to 1.3, it was at 1.3, 600, no. Yeah, it's closer to, got under $1 billion. And then we started our rise. And I would say this is the new floor, right? 1.8 billion. So the lows that we put in here. So we have this general uptrend that we can now monitor from this low of 700 million to a low of 1.8 billion to a low of 5.2 billion. So whatever low we put in here, maybe 6.8 billion is the new low, and we continue to increase overall open interest in the market. But we have this general seesaw nature of this open interest getting derivatives getting way overheated, people taking on way too much leverage, whether that be retail or more quote unquote sophisticated funds that are getting over leveraged as well, and then a big wipeout in the market. So this is definitely a trend that I want to keep an eye on more so. Every single time open interest spikes, and it's almost a perfect indicator of a sell-off incoming. So that's super interesting to me. Hi Brandon, I have a stupid question. It is my understanding that Grayscale Trust cannot sell its Bitcoin on spot market if it switches to an ETF. Can it release supply? So my question is, okay, so you're saying that you think the trust can't sell its Bitcoin on the spot market? That's not my understanding. My understanding is that they can't directly. So when you have a trust, you typically have a third party that's doing your buys and sells. Hold on. How derivatives trusts, how trusts work? Yeah, this is like a family planning trust is what Google's pulling up here. So yeah, it's like family trust. But so there's generally a third party that's doing the buying and selling and truing up of these accounts at the end of a period of time for trust, whereas an ETF has more direct access to be able to buy and sell the underlying asset as investors come in and out of the fund. So a trust, long story short, a trust has a lagging nature. That's why you see this larger disconnect between the NAV, the premium and discount to NAV, right? So sometimes you're trading at a pretty significant discount to the underlying asset value, and sometimes you're trading at a little bit of a premium. Typically, on average, with both trusts and ETFs, you trade at a small disparity, a small discount to the NAV because of the fee structure. But trusts have a bigger delay in how much time it is until they buy and sell assets on the open market versus an ETF, which has more direct exposure. So that's the main difference. But I mean, Grayscale might not be able to directly sell themselves, but the Grayscale ETF Trust, but they can sell coins when needed. So it's not like they can't ever sell coins. Hold on, GBTC Trust. Where is? So I'm trying to pull up the actual Grayscale. Here we go. Page so I can show you this. Okay. So assets under management 31 billion AOM. So your underlying NAV, let's see here, holding shares. Do they have on this page the buys and sells? I don't know if it's under the fact sheet. How many coins they're holding? There's a chart somewhere that shows how many coins they're holding in the trust. I believe they sold some coins at some point to help buy back GBTC to try to close that gap. So that happened a few months ago, and I was going to try to show that, but I don't see. Let's see here. How many coins does GBTC hold? What it is and how it works. Let's see if I can find the chart of the coins they held. But yeah, they were trying to, a few months ago, they had an effort to try to close the gap between, the discount that it was trading at. So at some point, and I wasn't paying close attention, but at some point it makes sense. What happens is when you have too big of a discount, it makes sense to sell the underlying asset and buy back the actual trust itself. I'm not finding that chart handy right now, but they can sell. I mean, they can sell their coins. Like if people sell the trust, they can turn around and sell coins as needed. So, but an ETF will give them more direct exposure. Will close that gap. It should trade much closer to, the discount or the premium is going to be much smaller because A, the fee structure goes down when it's an ETF, and B, again, they have more direct exposure. All right. Okie dokie. So back to, let's look at a few kind of themes we have. So I do have a hard stop coming up here. I did want to make this a pretty quick low session here. Quick session. All right, so let's look at the Coinbase chart. This is my main chart that I use. For me, being somebody who trades mostly 8 to 5 Monday through Friday, Coinbase has the best volume. So while I don't use Coinbase Pro for my trading, I use their chart for just general macro charting. And the volume profiles here are very representative of larger entities in the marketplace. So this is a really good chart to use in my opinion. So look at the weekly support level here we had. Let me just zoom in, make sure I got this just right. Yeah, okay. Put that. So I've got the anchor tool on. It's going to anchor it right on the price for us. That is 19,385 was the weekly high support set in December 2017, right? So that was the highest weekly close until we broke out over here in 2020. So we came back into that level, and as far as weekly levels go, we found it as support. We wicked below it, but we closed the weekly back above it. So this is still support. 19,385 is still support. Now, if we get, and then you can see here, we closed the weekly right at it, or closed right at it on this week, opened, closed right below it, and then broke through this next one. So this is also a support level in theory. Let me, this is actually a more probably appropriate support level, frankly. And then we've got another level right below it there. So we've got several levels to work with here on weekly supports. From 18,202, and this is why I had the $18,000 order. It was right here at this weekly level. 18K was that was the reason for the $18,000 level. And then I've got, I guess I said I have orders at 13,000. So I picked the actual swing high, $14,000. I picked the swing high of last cycle for that other order. And then the $10,000 order is rooted at these levels over here. Yep, right around $10,000. So this low of this before the Bitcoin bull market, these weekly levels is the $10,000 area. If we were to drop below $10,000, for more than a few days or more than a week, more than a few hours of like a liquidation trading session, there's clearly something going on elsewhere that we need to look at. But as of right now, I feel pretty good about this support level that we're looking to try to establish support on, $18,000 to $20,000, right? So again, we closed that weekly back above here. If we get a green weekly close, we can start to look at this level that was set the close of right around 20,500 as a potential level. But as of right now, I want to see this weekly close before I make any guesses about that level. We did close the weekly below the 200-week moving average, which in the past we've done, but then it's always bounced back pretty quickly after that. So we'll see how long it takes to bounce back this time. I would say expectation, given the broad market weakness, is that we actually find that as resistance for a period of time. And breaking the 200-week moving average is probably going to be a pretty significant signal. So that's my expectation, that we actually stay under that for maybe a few months. A little bit different than prior market cycles. So I vaguely remember saying something about its trust structure in a way to accumulate coins. Yeah, generally speaking, they're accumulating more than they're selling, but they can sell if needed. Or if it's warranted. All right. So looking at, again, are we putting in the bottom here? We're under the 200-week moving average. In no world is, most people would say that that's probably a good place to look to start to reaccumulate. And for the first time in a long time, so we've dipped below it here. When this monthly prints, it's going to be a dark blue. So prime time to continue ramp up your accumulation efforts as indicated on here. So yeah, let me put my last level on here. It's this level right here for the 10,000 level. Now I don't honestly think we're going to hit $10,000, but again, if we take out this low and we get another series of large fund liquidations, anything can happen. And also the broad market. If the broad market really falls apart, continues to fall apart, you know, anything can happen. S&P 500 wanting to bounce here a little bit. Yeah, I think this NASDAQ structure, given NASDAQ and Bitcoin trade together pretty closely, this is going to be really interesting to me to see how this structure plays out on NASDAQ. If we do find a bottom here, this is the 200-week moving average, interestingly enough, which is the perfect touch of the bottom over here in 2020 bottom. If it wants to find support right in this region here, then we very likely are, you know, really close to a bottom on Bitcoin. And if it breaks, my expectation is you'll see, you know, some support put in here, a break of this structure, a retest of that before NASDAQ really takes back off again. That's going to require a Fed pivot at this point, obviously. All right, let's talk about some potential bear market projects. Let's go look at the broad crypto charts. Let's look at Bitcoin dominance first. It's a little bit odd how Bitcoin dominance has played out. We had this, you know, big crypto sell-off, and then Bitcoin dominance hit a resistance level, one that we had queued up here at 48% of the market, and got pretty solid rejection off of that. You know, the timing of all this is definitely off. I was looking for a touch of 58% toward the end of the bull market, and we never got anything look like that, right? This is a very odd kind of bull market structure, but or into the sell-off to the bear market low, potentially being over here. So I don't really know what to make of the fact that the Bitcoin dominance has been stuck down here for so long. The fact that we've had a pretty significant sell-off and it's still down here, this might just be the new paradigm. I don't have a good answer for that. But should we break 47,000, that's going to be a big move to the next area of interest, which is about 57%. So keep an eye on this. If this holds in this range and we just stay range bound for a while, that may be the recipe moving forward for a little bit still, as we just stay range here for a little bit. I don't have a good answer on that. This has been very different than expectation for sure. I suppose, and I keep looking for something to cause investors to really flee to Bitcoin that want to stay invested in crypto as opposed to going back to fiat and then giving us a spike back over here. Now you saw early in 2020, of course, when we had the big moves. So this is what happens typically in a sell-off, right? Here's the COVID. Oh, that's not when the COVID sell-off. That was September 2019. This was the bull market run right here. I remember watching this very closely. Up the bounce off of 57 up to 70%, 74% of the market, and then it's been a total collapse into this range here. Was this the COVID sell-off? I'm losing track of years. Was the COVID sell-off was in 2020, wasn't it? Yeah, it's all through here. Okay. So this is the bear market rally then. Yep. Okay. So this was our bull market run, and then the altcoin market run, and then we've been stuck down here ever since then. So we'll see. ADA BTC broke out of the weekly trend. Back to August, kind of impressive. Yeah, so Cardano is definitely, I don't know, what I see here from my trend, I don't see a break of a trend just yet, in my opinion. But we hit this support level of 38 cents. Now, I was looking for as low as 30 cents on Cardano. That's kind of what I was thinking. We might set a floor around 30 cents for a period of time. So we'll see. My expectation is still that... What'd I do? Sorry. Be right back. All right, sorry about that. I had to adjust something. Let's see here. Where's that Cardano comment? So, is it ADA BTC? ADA BTC. There you go. ADA BTC did break that downtrend. Yeah, so I'm really looking forward to adding a lot of Cardano here in this bear market. It's looking pretty good. Yeah, so it hit perfectly these weekly levels that we had on here. This weekly potential low. Perfect area of support to be looking for. Kind of establish some support there. Let's redraw this trend line just on a weekly level, because at this point I want to be working with when we're in markets like this, in a down market, I want to work with very, very broad, long-term candles, and because I want to see a momentum shift, which takes a lot of time to form. Bottoms take time to form, so I really want to be watching this on more like weekly candles for now. And when things are really hot and trending, we trade on like the 4 and the 12 hour, right? But as of right now, I'm really focused on the weekly levels. But we put in a nice support over here. So you're right, we have broken out of this area. Let's go look at the, so we took we're into the 200-day moving average right now on the ADA BTC chart. Looks like we're consolidating under it. Let's see if we get a touch. What I would prefer to see is, so we did break the 50 into the 111, back down to the 20 really, and then back up to the 200. I want to see us curl back down on this chart to the 111 and then resume off. That would be some pretty good area to look for buying into some support over there, which would be this daily. Let's see what kind of weekly levels we put in. Yeah, let's go back over here to the daily chart. So given that we've broken back above here, what we're going to look for is a higher low to be formed. So we want to stay above this wick low right here at this point and start forming a series of higher lows, and we have a little bit of a higher high here. So what we want is the next low to be just another higher low, maybe back to the 50 would be perfect, and then we want to take out these highs on the next move up, right? And then you really have a good counter trend to start working with. That could take some time. I mean, in past, we had a really pretty solid compression of price that gave us a slow rise. But what's interesting, see, this is why you have to stick with, we wait for the moving average to be all retaken. Over here, yeah, we had a nice little spike. You could have played that and then got back out. This was 2019. So just examining this, right? We put in a low, had a similar compression of price under the 200, right around the 50 and the 111, and then broke out. Yeah. You can see this behavior. So we are looking for across the board a bear market rally to play. So this might be the first signs of our bear market rally playing out, but you have to be very cautious because the bear market is likely going to take several months, if not over a year, to really kind of form that bottom and then get a final resumption off of that bottom. So we'll see how long this takes, but we're starting to see the first signs of our first bear market rally on Cardano over here, which is great. I would love to try to play that little bit of a move. Let's take a look at Avalanche. Avalanche is looking horrible. So we're gonna look at the Bitcoin charts here real fast to see what they're doing versus Bitcoin. Polkadot. Yeah, we got a ways to go to really regain momentum on all those moving averages. So Cardano is the best looking one by far. And the reason is you get the 50, the 111, the 20, they're all curling upwards. Now they're still the wrong direction, right? The 50 is below the 111, which is below the 200. So I typically wait for them to kind of reverse to be the right direction, where the 50 is above the 200, and buy into support as that reversion's happening, as all of them are starting to trend back upward. That's typically what I prefer to do. Over here, you would have seen this right here, this 50, took the 200, came back right to it, price bounced off of it, and then resumed off. Now, that's a little bit trickier to catch, but you can start to see the momentum building here, right? You see the lows, the highs, the lows, the highs. That low never come back below that. Form support here, get a little bit of a structure. Moving averages, a flat line started to move up. This breakout right through here is something you can play. If I zoom in a lot more on all that, you can kind of see it. Let's just remove all the drawings from this. All right, this is what we're looking for to happen, right? So right now we're kind of in this area right here. Something like that looks more like that, right? So what we want is a higher low than these lows over here. Let's form some support. I don't know if did that wick take out that other one in the past? This wick might not have. Nope, it didn't wick out that on the BTC chart. And then you get this price appreciation, 50 crossing. I don't care about the crossing so much. All I care about is that the moving averages have flatlined and they're starting to move the other direction. And so it would have been tougher, but this little bull flag right here is the first place I can see to start to try to play this, right? A break of this, back into support right there is where you buy. Right there is the buy. Right, so you get the moving averages moving in the right direction, flatlining, coming back up, price breaking out, forms a bull flag, breaks out of the bull flag, comes back to that daily support level, and then off it goes. So look for structure to look something like that, maybe for our next play. But then again, recall in 2019, if you were in the market in 2019, you might be thinking this is a V-shaped recovery and get slapped back down. So be very, very cautious. The thing to do in all of these is to draw that breakout trend line. You can see as price appreciates, it gets a little bit disconnected up here, a little bit overheated. It starts to curl back down. When you break that trend line, you gotta take action. Okay. AVAX dot ETH. What's ETH BTC doing? Yeah, I'm still waiting for ETH. This is why I think the Bitcoin something's going to happen that causes Bitcoin dominance to spike, because I still think ETH's got to come back down to these levels. That's a lot of area. Let's go to the weekly chart. There's a lot of kind of dead area that really hasn't been properly traded through, and you see you lost these levels. If we just get rid of all these moving averages here so you can see it more clearly. If I just draw a horizontal right through here, you can see the areas that were lost, right? Let me just make this as a nice thick line. You can see you traded right through, right below all that. The next area of significant support's all this way down here, which is closer to that bottom trend line, right? So, it would make sense for you to put some price action in here in this area that's been lightly traded into. So you can see all the price action over here, all the price action up here, all the price action down here, and a little bit, but not much price action. So some trading in there, just looking at how the market likes to remove inefficiencies. This makes sense to me that we would want to trade in that area for a bit. So for Ethereum, what I was saying before was if we held this kind of structure, I was looking to possibly build myself back up an Ethereum position if we were going to hold this uptrend structure, and we didn't. We lost it. So we continue to wait to rebuild our Ethereum position to these lower levels. All right. ADA ETH. Yeah, I have an ADA ETH chart somewhere. It's they've been doing battle for a long time. It's a very interesting chart. So you can see it's pretty sideways. ADA is slowly gaining momentum, very slowly gaining some momentum versus ETH, but it's a process. They've been pretty battling against each other for a while here. It's just sideways. Something will break loose eventually, right? And one will permanently gain, or ADA might just stay on the floor, but it can fall out too. I mean, it can lose this level and trade down here. If ADA fails entirely, that's what's going to happen, right? If ADA is successful, it's going to claim these highs and probably trade above that. But we'll see. Let's look at some USD charts and then I need to wrap. So this is ETH. I know it sounds painful. I know a lot of people think I'm crazy. This is why I think you look at this peak and how far down below we've come below that. Let's look at the weekly levels. Did we close weekly below? Yeah. So like on the ETH chart, unlike the Bitcoin chart, here's the prior all-time high. Here's all that support that you had, and we've closed all below all that. So it is. I'm definitely in the camp of this is now resistance, right? And I don't see Ethereum. The reason I'm kind of bearish on Ethereum is not that I don't like Ethereum. Obviously, I've been a big Ethereum fan for a long time. Just for what it brought. It's the invention of bringing smart contract functionality, programmability. It's really it's decentralized programmability is really what it represents, right? Bitcoin spawned the decentralization kind of era, and it has its value etched in stone forever because of that. Ethereum kind of spawned decentralized programmability, so it will always have value in my opinion, but this is now resistance in my book. And Ethereum has competitors though. This is the main difference between Ethereum and Bitcoin. Ethereum has competition and Bitcoin does not. Bitcoin is the genesis of the entire space, and it is competing as a monetary asset, a monetary base. It's fixed supply, it's known fixed supply. There's a lot of other properties that are unique about it. Ethereum is competing with a universe of layer ones. Now, Ethereum may will probably likely retain value throughout the ages as the original, the OG programmable chain, in which maybe super high value transactions are recorded on as time goes on. It may be relegated to just really big important stuff goes on Ethereum, and then people use other chains for other nominal transactions. That's kind of where I see it, but nonetheless, I think Ethereum has competition, Bitcoin doesn't. It's the main thing. And so for those reasons, I think it's going to come back a lot further than Bitcoin. I mean, its main competitions are like Cardano's huge competition, and you've got the whole universe of Elrond and Avalanche and Polkadot and everybody else, which are a little bit different in a lot of ways. But Cardano's really direct competition. So, all right, Elrond USD, we broke down below 65. ETH, Link is one that I'm watching closely because it obviously in the past has done well in the bear market. So we're going to watch, and you can see here that it still is putting in higher lows at this point in time than last bear market cycle. So for as much as people think that Link has been a total disaster of an investment, maybe they had overinflated expectations. Is kind of my feel on it the whole time. I'm not surprised it's doing this myself. I've held a few percentage of it for a long time. Let's look at the moving averages on this. What are we getting? Are we getting a little bit of signs of a bottom here? We're still not above the 200. So what I want to see again is I want to see price get above the 200, come back into it, and drag these slower moving averages back above it. So like for example, this type of price action. Price gets above it, back down to the 111, retakes it, reclaims it, and then it holds it. And what it does is it drags these higher moving averages. And when we get this type of price action, then I'm more inclined to buy on touches of those shorter moving averages as all my moving averages are moving the right way. So this place is to look to lean into buy as long as price is net above the 200 and the moving averages are moving in the right direction. This is the type of thing I want to buy, and I want to be out when the market shows you the opposite, right? So when the market shows you that, hey, we've lost all this momentum. Well, this is kind of a clear, and you get these big, huge monster blow-off tops. It's coming back down. So it's just the detachment from the longer moving averages, the 200-day moving average over here. The percentage detachment from that was just too excessive, right? So 245% above it. So what we're looking for over here in the bear market is the same thing. I want to see price retake all the moving averages and get the moving averages flatlined and moving back in the right direction. I don't care about moving averages crossing or anything else like that. I just want momentum. All I care about is that price in general. We can see price has some momentum, and it just from a human standpoint, it makes it easy for me to instead of looking at this chart blindly without the moving averages and saying, yeah, look over here. This feels to me like we have momentum, which we do in this chart, but to quantify where that momentum, like what the levels are, is why I use the moving averages. Okay, so this gives me that that long term. The average trading price of this asset over the last 200 days is that purple line. The average trading price of that asset over the last 111 days is that line and that line. So that gives me kind of a baseline. This is the average price that asset is traded at based on closing price, right? Daily closing price or weekly closing price. Daily is what I typically use. Okay, so we got a ways to go on a lot of these charts. We're getting closer though. We're definitely getting closer because of the level of detachment we have on the downside. The same thing is true though. I said that earlier, right? So when you get these massive blow off tops, you're hugely detached from the moving averages, 140% above. Same thing's true on the downside. When you get 75% below the moving average, I don't know that that's the low per se and that we're going to have a V-shaped recovery, but I do know that it's overextended at that point. The price is overextended. This is the average price over the last 200 days this asset is traded at. So Link, for example, the average 200-day price of Link back in early May was $19, but it was trading for a brief period of time at $5, right? That's a huge divergence of the average kind of daily close price versus the realized price at that point in time. So that you're getting oversold big time to the downside, and you're likely going to return to the mean before resuming back down, or closer to the mean before you resume back down. That's the probability. So, all right. Well, anyway. I'm going to wrap up there. I've got other things to get to today, but wanted to take a look at the markets. So last thing I'll say, I'm looking at a couple projects, right? I'm looking at these interchain projects, router protocol being one of them, Quant, a few of these others. I haven't made a decision on which ones are my favorite yet. I did want to make a comment on Saito. I know a lot of you were talking about Saito. A lot of people were talking about Saito through the bull market, and I think there's a pretty big cohort of people that bought it around 50 cents, if I recall. So, not too unheard of. It's 90% off since the highs. A lot of altcoins are off that much since the highs. This project, though, it's an interesting way to try to solve a what I'll call a Web3 problem. So if you have a lot of applications that are using a lot of infrastructure, so in bandwidth being the main one, you're burning a lot of bandwidth for these decentralized applications as Web3 applications. You need some mechanism to reimburse operators for the cost of network bandwidth, right? So we're soaking up bandwidth, and it's been kind of assumed that bandwidth is almost a free thing for blockchains to consume for a long time. I would argue that's actually not the case, because that's why miners get paid. It's part of the reason miners get paid, but nonetheless. With applications, the structure is a little bit different on dApps built on top of blockchain. So how do you properly pay back the use of bandwidth from an applications perspective, a dApp built on top of a blockchain? Well, I would argue that for the most part, it should be application specific. So there very easily can be something built into the application. Some sort of nano payment structure that allows you to reimburse use of network bandwidth. It can also be a parameter in proof of stake blockchain. So Charles Hoskinson, for example, of Cardano, has talked about making bandwidth or storage or compute capacity a derivative of how you get paid back as a miner. 1 second, guys. Sorry. Okay. So with that said, thoughts on Solana? I'll get to that. We'll answer that. But on the Web3 side, how do you pay for that? The way Saito's going about it is basically, I'm just going to oversimplify, is they're building a layer 1 chain that will automatically compensate for that. So if you're building a dApp that uses a lot of bandwidth, you need to be able to repay participants for the use of that bandwidth. It's built into Saito. So that's one. It's one I'm watching. They continue to build 716 on the list here. Again, the reason I was down on Saito, I didn't want to buy at these higher valuations, was the problem space. You have to have a very large cohort of actually used and deployed Web3 applications for this to become an obvious problem. So we have to get past the basic hurdle of Web3 adoption. And once we have a critical mass of Web3 adoption, then this problem will become more apparent, and then people will look to solve this problem. And so my issue is Saito's so early, I don't know, I don't have a good way of gauging how the market's going to react to their solution versus other potential solutions that are going to arise. I personally think that the market is probably going to move to a more application-centric solution, as we've seen in the centralized kind of Web 2 world, right? So you look at what happened with the internet inherently is already decentralized as it is. TCP/IP and DNS are already inherently decentralized, but the market moved to this kind of central model, and at the application layer, we pay for bandwidth usage basically. And I kind of think the same thing's going to happen with the blockchain and dApp space, but Saito solves this in a different way, kind of at the core layer. So at a $10 million market cap, now their tokenomics are also horrible, I'll tell you that. But at a $10 million market cap and a fully diluted market cap of $100 million, this is where the tokenomics, obviously you can see here, there's a 10x on that, not the best. It's interesting to start watching, because as the bear market goes on, if Saito continues to develop and grow in their deployed footprint and Web3 adoption continues to ramp up, then at that point, there's going to be an inflection point to where the opportunity of Saito to capture a good portion of that of that problem space in the market and make a decent return on its market cap is there. The other problem is the tokenomics don't look great, so I want to see how things shake out on the tokenomics side. Now, Solana, I think, is a total trash project. I've always said it. I'll always. It's a centralized VC-backed trash. It's got some interesting technology. The proof of history part of it is pretty cool, but it's VC-backed, bunch of hype, overinflation of it. They're vastly overinflating their actual performance. And when you're deceptive, when I sense that you're deceptive about things like technical performance numbers as they're easy to validate, I just don't trust you. Period. End of story. I don't trust FTX. I don't trust Sam Bankman-Fried. I don't trust Solana. Period. End of story. I don't like it. Don't trust them. This is one I think is probably going to zero at some point. It might not because it's going to have enough VC backing and it's tied into FTX enough that it lives as a kind of like. But it's so bad. It's just so bad. So horrible. Such a horrible implementation. So centralized. It's ridiculous. All right, guys. I've got to run. I've got something else to get to. Everybody take care. I'm going to throw on some Doge Wave for y'all, and we will talk to you next time.